Hey guys, Ijazawan here. Welcome back to another video. So the Bitcoin ETF, the futures ETF, is finally here. Today it's going to launch on the New York Stock Exchange, ticker symbol BITO. But what is it? What impact is it going to have on Bitcoin? Is this a good thing? Is this a bad thing? I'm going to share my view. We're going to take a few minutes here just to understand what could this represent and what could it mean, because I'm getting a bit of a mixed feeling around this and I want to share my viewpoint on it, because there's a whole bunch of positive elements which we know about and have maybe been a little bit exaggerated and overhyped, and then there's some negatives which haven't quite been spoken about. So I want to go into this video with a bit of an open mind and just touch upon a few different points with you, just to kind of broaden our thinking, because it's easy to read a few headlines, watch a few YouTube videos, everybody saying this is amazing, Bitcoin to the moon, we've got our ETF, but what exactly is going on here? Let's kind of dive into this and spend some time talking about this. So the first thing I want to explain is, Bitcoin futures have been traded, right? The futures are what have been there for a long time, and the majority of price action and price discovery is determined by the futures exchange right now on the CME, the Chicago Mercantile Exchange. Now, the interesting thing there is, before, Coinbase, Kraken, Binance, these guys were leading the exchanges in terms of price discovery. Now the CME is. Now, if we go back a step, we've had option trading for a while and futures have been trading for a while. What are the difference? Well, your option, for those that don't follow this closely, an option is an option. You can choose whether to buy or sell in the future. Your futures contract is decided, right? When you buy a futures contract, you're agreeing to buy or sell Bitcoin at a future date at the price you agreed. Okay, so if I say I'm going to buy one Bitcoin from you next month at $150,000, there's no backing out of that. That's not an option agreement where I can buy and sell, where I can change my mind, right? It's an option to. So that's the first thing we need to understand. Now, the other thing we need to understand is this piece of paper, this futures contract, is not necessarily backed. Well, it's not backed by the BTC. It's just a contract. It's a contract which represents something which people can buy and sell. Okay, so that in itself it's called a derivative, right? It's a term to describe something which bases itself on the price of an underlying asset. So we need to understand that first of all. So now what they've done is said, hang on a second, let's take those futures contracts and put them into an ETF. An ETF is just a wrapper, right? It's a fund managed by someone, a company who would take a fee to manage that for you. Because let's say the average person or the average institution doesn't want to go and buy these futures contracts directly. They can buy into the ETF nice and easy. You can open up your Robinhood account, or if you're in Europe, Trading 212 or Free Trade or any of these apps, and you can go ahead and buy some BITO ticker symbol from today on the New York Stock Exchange, right? And that will give you exposure to the Bitcoin futures. You don't own any Bitcoin, so that's really important to understand that. Now, after this one, there's going to be a few more. Apparently, Valkyrie are going to launch their Bitcoin futures ETF, and Invesco are launching something as well. We need to listen out for those. But what impact is this going to have on the Bitcoin price? Well, the first argument that we're hearing is that this will lead to more money flow into Bitcoin. And I kind of agree with this. I think we will see an amount. Some people are saying the inflow into BTC could be between 5 billion to 36 billion. Early estimates, right? And we know, therefore, we can calculate what impact that's going to have on the price of Bitcoin. Now, the interesting thing we want to understand here is this is how they explain how the money's going to come in, right? So you're going to buy futures. When you buy futures, you get something called contango. And what contango means, it describes the shape of the futures curve. Now, when your short-term contracts are lower, so they're less expensive than future contracts, i.e. the curve is going upwards and to the right, that is called contango. Now, the problem with contango is the following. When you think Bitcoin price is going to go up, you will have contango. Now, your futures contracts expire. So if you're holding a futures contract and you want to stay invested in Bitcoin, right, then you need to buy the next futures contract on the curve and then the next one. But every time you're selling low because the contract you hold is lower in value than the future one. So you're selling low and you're buying high. That's not investing, right? So this is naturally not going to be positive for long-term investors in crypto. Now, the other way where money can flow into spot is when, so in contango, you have the future is greater than spot, right? The current price in spot. So that opens something called a carry trade. And again, this is from my experience back in the day trading. I'm trying to remember it all. When I was at Morgan Stanley trading, you'd have a carry trade, which is where you buy the spot today and you sell the futures contract, right? And you make that difference. And a lot of experienced traders will be doing that once this becomes available. So they're saying that's what's going to happen. You're going to buy the spot, you're going to sell at the futures price, and then you're going to get demand for spot because these carry traders will want to buy spot today, and that's why you could see some price going up. So this is the thing we need to understand. That's the first point in terms of the money coming into Bitcoin and understanding what impact that could have, because that could have an impact. Now, the other piece is how much of this is overhyped, right? How much of this is actually going to lead to fundamental, demand for crypto. And this is where you can get into the conversation of whether Gary Gensler is actually being quite smart here. Because this has crossed my mind, is Gary Gensler being smart by giving us, the crypto community, a small win at the expense of never actually delivering on a true Bitcoin-backed ETF? And this is what constantly goes through my mind. Is he almost going, you know what, here, look, I've conceded on this one, but I'm going to bash you over here and not let you have this one here. And, we know, could this just be his way of pandering and saying, oh, look, you can have this small Bitcoin trade, but I'm not going to give you the full Bitcoin-backed one, because we know that the CME is just paper trading futures contracts, right? So for him, he can allow this to allow those that would normally speculate on Bitcoin to go for the futures contract instead of going for the sole, real solid asset, which is Bitcoin, which is easy enough to buy now, right? So, the people are trying to paint it as, oh, this is great because you're going to get a whole bunch of institutions who, wanted exposure to Bitcoin, which can do so now through these futures ETFs. But I think it could have the other impact. And that's what I want to monitor. I don't know. It's just a hunch. I feel like it can start to confuse the narrative. It can start getting people who would normally go and buy some Bitcoin, set up a Coinbase account, set up a Binance account, set up a Kraken account, go buy a bit of Bitcoin and learn about holding the addresses. Will it prohibit that? Or, to play devil's advocate, will it actually become a gateway drug? Will it become a way for institutions to kind of start playing around with the futures ETF, and then when they see the returns, then they go and buy the actual underlying Bitcoin? This is something we have to watch play out. I don't have the answer to that. It's just something that has crossed my mind because, Gensler has always said that a Bitcoin futures ETF is better. And the reason he's going to say that is because obviously the futures meet all the SEC's criteria, which is why they're listed on the CME, and therefore he's happy building an ETF on a product which is already listed on the CME, right? It's easy. And that's why a lot of people who are getting overhyped on this news in terms, and by the way, I don't want to come across negative. I just want to come across balanced because I'm super pumped for this as well, but I want to put this into perspective. I hold a lot of Bitcoin. I want this to move just as much as the next person, but we need to be smart, right? And if Gensler's, for Gensler to give us this futures ETF is very easy for him. You've got an asset in futures contract which are already listed on the CME. The CME is the primary source of price discovery for Bitcoin. He's just wrapped it up and allowed it to trade in an ETF. That's not him giving it much regulatory nod or approval, right? A true approval is for him to accept the true ETF. And that's why I think where people are saying this is, a really big stepping stone towards a true Bitcoin-backed ETF, I think we've got a lot of work to do. I think we can do it and we will get it done, but it's a big step to then allow people to buy spot BTC for an ETF. That's completely, and that is the one that would be a complete game changer. Now, the other thing with, the Bitcoin futures ETF and in terms of the contango is this could be quite a big trapping. I mean, you got to remember futures are best designed for things like oil and livestock, where it's difficult to store, you have transport, and therefore people don't want to get into owning the underlying asset. You don't want to own oil per se and drag around barrels. You don't want to own livestock and have to herd 100 sheep around, but you want to you speculate on the price and have an investment on the underlying asset. That's where these derivatives came from. That's where initially these futures come from. But in Bitcoin, why is that necessary? Why would you forego 5 to 10% in fees on the ProShares ticker BITO? It'll be roughly about 5 to 10% in fees just to speculate on the price of Bitcoin or to invest in price of Bitcoin? Is it really that difficult to go and own your own keys? Now, I understand there's always going to be a set of institutions who, for whatever reason, cannot own Bitcoin on their balance sheets, and this will be a great gateway drug for them to come into the Bitcoin community. But I think, I think there's a lot of things which are going on, under the radar, which we need to be alert to, right? We need to be vigilant of, because for me, when you open up derivatives in a nascent technology, which is Bitcoin, that can have the reverse effects to what we want, right? And this could almost, this me becoming a bit of a conspiracy theorist, but it could also have the unintended consequence of Gary Gensler using this ETF to prove what he wants to prove all along, which is that he needs more regulation, right? Because if you're, on the one hand, he's saying we need more regulation, it's like the Wild West, and on the other hand, he's approving a speculative derivative paper contract in the form of a futures contract now on an ETF, instead of just allowing people to go buy the underlying asset with the exchanges. So a whole bunch going on. It's a bit unclear as to where it's going to go. If you're trading it on the short-term market, then please be careful of buy the rumor, sell the news. I could easily see, after we get listed today, the price kind of heading to the downside. Long-term, look, it's going to have a good effect, right? I'm not saying it's not going to have a good effect, because more people having interest in Bitcoin is good. I agree with that. And if we can somehow take that interest and bring it back to our spot market, that's what we want. We want institutions, we want these funds involved. And if this is just the first stepping stone, great. If a large blue chip company gets their first bit of exposure to Bitcoin through this futures ETF, and then later down the line they go to experiment and ask Square, Jack Dorsey or Elon Musk, how did you do this on your balance sheet? How do I actually get real Bitcoin on my balance sheet? And starts a conversation, then it's going to be amazing, right? If we see a bunch of carry trades and therefore more demand for spot, that could have a good impact. But again, how much can it really have an impact? I mean, if it's the upper estimate of 36 billion of inflows, then that can start to decently move the price. But we need to wait to see how much of a demand there is for these products. And I think, the bit that's worrying me is I don't want to lose focus on people buying underlying Bitcoin. That's the best way to drive adoption. And that's the purest way and the way that Bitcoin's been set up. I don't want Bitcoin to fall into the trappings of the existing financial system, right? Which is exactly what this is. I've been there, I've worked in it, creating ETFs, creating futures, creating derivatives. This is where speculation gets worse. This is where bubbles are created, not in crypto itself, right? The existing financial system is the one creating the bubbles through creating all these pieces of paper not backed by anything. So when they want to trash on Tether or USDC, I get that, and I'm all pro regulating it and making sure they're audited and backed one for one, like we saw happen with Tether's fine. I'm all for that. But, when you're creating these kind of futures contract, naturally that's going to create more of a speculative bubble because the spot is not moving with the futures. So definitely something to watch out for. Definitely something I want to keep an eye on. I think overall it's going to be good, right? It's going to be good. It's a good pump, but let's not overplay it, because I think even when you see the mainstream media pumping it so much, then I get a little bit skeptical. It's one thing us here on these communities understanding it and saying, yep, this is a good step for us, more adoption, more people are going to get into a Bitcoin. But the fact that they're singing the song so high gets me a bit suspicious. And I think, I've just shared my thoughts here and ranted on for 13 minutes or so. Hopefully that gives you a different perspective. I don't want to come across bearish on it. I just want to come across pragmatic and say these are the things I'm thinking about in terms of the ETF. Hope you guys found this useful. Hopefully this explains what's going on with this ETF a little bit more. If you like my perspective, then please don't forget to hit the like button and subscribe, and I'll see you in the next one.